Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Bo Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast. And on today's show, we're going to talk about adaptive reuse financing. Basically, if you look around and you're seeing these retail shops or old office buildings or old industrial buildings, you know, in the core part of the city now over the years. Usually they were built in the early 1900s and they're vacant, or maybe there's just a higher and better use. These buildings now are being looked at and being converted to a lot of different things, but mostly what we're going to talk to you about today is converting to multifamily properties, right? So even hotels right now, that especially with COVID, hotels are now starting to be looked at to basically remodel into a multifamily property. So we call this adaptive reuse, taking an older building, whether it's office or retail, and then remodeling it and converting it to a higher and better use, such as multifamily. So you're seeing a lot of this going on right now, and because of COVID, I think a lot of businesses and retailers are shutting down and they're going more to an online platform for those that survive. So there's a lot of developers that are, instead of trying to find new dirt, which there's barely any in the core centers of the cities, they're taking these properties and they're basically adapting the use of the property, remodeling the property to a higher and better use. And now we're going to talk about how to fund these type of projects and what is involved with that. And I think, you know, speaking to a lot of developer friends of mine, this is what we really see as an opportunity over the next 3, 5, 10 years. And I think you're going to see more and more, especially with so many businesses going under or being converted to more of an online type of business, which is just naturally happening, but COVID expedited this process.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
So, you know, how do you finance these projects? Well, there's lenders that actually have an appetite for this, especially if it's like a multifamily project right now. And you can get up to about 75% of the cost of the project acquisition and construction costs, or, you know, so from 65 to 75% from sometimes banks. Sometimes there's private funds that really specialize in this type of construction and this adaptive use, reuse type of scenario. And then, of course, we can talk about other ways to put together the capital stack to try to get the highest leverage possible. So on some of these projects, you can get up to 80 to 85% loan to cost by putting together a senior lender, whether it be a bank or one of these private funds. And a lot of right now, because banks are really kind of scrutinizing every file more so than ever, you're seeing a lot of PACE equity type pieces coming in the capital stack. And so you might get 65 to 75% from the senior lender, and then maybe 10 to 15% from a PACE piece, right? And so that's kind of the highest leverage you can get right now, and that's what you're seeing a lot of the developers look for, a model like this to be able to facilitate the project. Because remember, the less capital and less investor capital they have to bring in, usually it's higher returns at the end of the day. So that's what they're really looking for. Maybe it's a 2-year bridge loan. They remodel the property, get it stabilized, 2 to 3 years, get it stabilized, and now they're able to refinance into agency debt, Fannie or Freddie, or possibly HUD, because HUD doesn't have a 3-year look back like they did before. So that's how these projects are getting funded. If you have a project you're eyeballing, or you know somebody that does, and they're interested in finding out what the best adaptive reuse financing that on the market, feel free to reach out. And thank you for watching another episode of the Investor Financing Podcast. And please share and like this wherever you see it on YouTube, Libsyn, iTunes, wherever you see it. And I hope you're enjoying, and feel free to email us with any suggestions of guests for future episodes. Thanks a lot. We'll see you soon.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.